JSE deep in the red this afternoon, in line with international markets. This with COVID-19 infections still on the rise globally. That's dampening investor sentiment. Let's chat now with Makwe Masilela from Makwe Fund Managers to get his sense of what the market did today. Makwe, good afternoon. The markets and GDP, let's start there. It doesn't look like the GDP was strong enough to actually overrule anything that happened internationally.
Definitely, markets were driven mainly by the worry that investors are starting to have, and is putting a damper on investor sentiments as we continue to see the number of new cases increasing, and it's not just in the US and also in other parts of the world, and also with more and more countries putting more restrictions back into place, the likes of South Korea, Germany, California, you name it. So that itself, it tells you that it might hamper economic growth, as we've seen what happened when we had some serious restrictions. So it's just a question of what has been happening with the new numbers. Yes, markets are overexcited with the vaccine, especially with the the UK starting today, but it was not enough to cool the market nerves. And remember, the past week or so, markets have been going up at the back of COVID-19 vaccine. So the vaccine part of it, the Devan, is all baked into asset prices. And yes, our GDP, it did absolutely nothing because it was expected. And I think maybe it's critical, hence the Stats SA must move from the annualized kind of numbers, because they don't give a clear reflection. They have to move into non-annualized, because any disturbance, it gets to get the numbers to move hugely. As we've seen, the second quarter, it was down 51% because of the lockdowns. So now, because people have started going back to work, activities are back into action. Hence, we see a serious jump of almost 66% because it is annualized.
Then the Rand, though. But I mean, the Rand has tracked all the way strongly to 15 Rand against the US dollar. We haven't seen that number in a long time. Surely that's perhaps got to do with the GDP figures, perhaps automated systems taking in some investments there.
Definitely, and we don't undermine the fact that what's driving our economy, which is consumer spending, accounting for 60%, we saw that going up by almost 69.5%, and also gross fixed capital formations up almost 26.5%. Those are positives, and hence the rand managed to strengthen. But also, this is the day where you have the US dollar, which is kind of muted. It's also adding to the strength of the rand.
Makwe, did you get a chance to check out PPC's results? I mean, that share, PPC Cement, up 17% on the day, despite showing that there was a slide of 40% in sales. Investors think that there is some sort of optimism to rely on, I would imagine, going forward with cement sales.
Definitely, but year to date, this share price is down almost 58%, and the guys managed to increase their sales. And what's encouraging is not just only retail sales, also the infrastructure spend. And also, when you look at the likes of Rwanda, you say the retail and the infrastructure spend coming from that side are working okay. But this whole thing of fair value adjustments and also the foreign exchange movements had to lead to losses of almost 366 million. Hence, you see their headline earnings down almost 30, or profits which are supposed to go to shareholders are down almost 37%, but operating profits are up over 77%, all because we've seen the increase when it comes to sales. And if there's anything to go by with the GDP numbers that we've seen that will expect to grow, then definitely demand will increase. If there's anything that economists expect that our economy will be led out of the current rules by infrastructure spend, then the likes of PPC continue to be well positioned.
All right, we'll leave it there. Makwe Masilela from Makwe Fund Managers, thanks very much indeed.